heard at the closing bell at the New York Stock Exchange, signaling the end of the trading day. The Dow capped off the day at about the same place where it started. The index ended the day mostly flat, up about 27 points. The S&P is down about half a percentage point, while the Nasdaq fell by more than a single percentage point. Brian Sozzi joins me now. He is anchor and editor at large for Yahoo Finance Live. Brian, welcome. Thanks so much for being with us. So what was driving the markets today?
Well, today, I think what we saw, well, first of all, thanks for having me. I think what you saw today is a little bit of a relief rally because, let's face it, the markets have been raided by angry bears going up and down Wall Street. And the reality is stocks can't go down every single day. And I have to be honest, I'm surprised to see the market close in the green today. The session started off with really bad economic data from overseas. In China, you had Goldman Sachs top strategists lower their estimate for how much growth the economy will produce this year and how much the stock market may rise this year. So a lot of bad news continues to get really put over the heads of investors here. So again, I'm surprised we finished in the positive.
Yeah, in the green, but barely, right? So let's talk about the former CEO of Goldman Sachs' prediction. He's saying that there's a high risk we're headed for a recession. Are investors concerned about an economic downturn having any noticeable impact on the markets?
Well, whenever you get a top name in finance like Lloyd Blankfein, who's still senior chairman of Goldman Sachs, you have to sit up and take notice. But you can't say this should come as any surprise for two reasons. First and foremost, Goldman Sachs has already been predicting a 35% probability for a recession next year. So they've been out in front of this. Secondarily, if you look throughout the stock market, you have a lot of average investors out there in the world that are right now holding the bag in some major tech stocks: Facebook, Amazon, Apple, Netflix, Google. These are some of the hottest stocks in the market over the past decade, and they've been all eviscerated. Netflix shares down 70% so far year to date, despite all of us paying more for Netflix to come into the year. What is the stock market saying? It's saying that growth is likely to slow down next year, and we may, in fact, get a recession next year.
All right, let's turn to China for a minute because we know what happens over there certainly affects us over here. So retail sales were down more than 11% last month. Of course, the country's strict COVID restrictions fueled many of those losses. So how are the economic challenges in China impacting our economy here right now?
Well, your first instinct would be, I think, to view the slowdown in China, perhaps that is a little deflationary, and perhaps that comes across the globe and brings down prices for certain goods here in the U.S. because we rely on a lot of companies or overseas to get our goods. But at the end of the day, if you are locking down China, you are probably going to continue to see high levels of inflation in this country because you look at Apple. If you were closing your factories down, what are you going to have to do? Probably charge higher for various services and the next iPhone. You look at Tesla, key operator in China. If their plants continue to get closed down, they're going to continue to raise prices on U.S. consumers. And then last but not least, a lot of U.S. companies have big major operations in China. You look at Starbucks, their sales fell almost 25% in the most recent quarter because of these China-related lockdowns. And because of that, the company's stock price has been under severe pressure, of course, impacting the wealth of U.S. consumers.
All right. Brian Sozzi of Yahoo Finance, thanks so much for your insight. We appreciate it.
Thank you.